Basic Bookkeeping for Beginners. A step-by-step guide to becoming a bookkeeper. Bookkeeping is the foundation of every successful business, tracking financial transactions and ensuring accurate record-keeping. Whether you're starting your own business or pursuing a career in finance, understanding bookkeeping fundamentals is essential. Learn essential skills. Master fundamental accounting concepts, financial record-keeping, and industry best practices. Career opportunities. Open doors to roles in accounting, finance, and business management. Business success. Gain the knowledge needed to maintain accurate financial records and make informed decisions. Financial record keeping. Bookkeeping is the process of recording financial transactions for a business or individual. Tracking income and expenses. It involves tracking income, expenses, assets, liabilities, and equity. Essential for business success. It provides a clear picture of financial health, enabling informed decision-making. Accounting equation elements. The accounting equation is a fundamental principle in bookkeeping, representing the relationship between a business's assets, liabilities, and equity. It is expressed as assets equals liabilities plus equity. Assets. Resources owned by a business, such as cash, inventory, and equipment. Liabilities. Obligations owed to others, including loans and accounts payable. Equity. The owner's stake in the business, calculated as assets liabilities. Income tracking. Record all sales and revenue, including cash sales, credit card transactions, online payments, and any other sources of income. Keep detailed records of invoice numbers, payment dates, and customer information for easier tracking and reconciliation. Expense management. Track all business costs, including fixed expenses, rent, utilities, insurance, variable costs, supplies, inventory, and one-time purchases. Save receipts and document payment methods, dates, and vendors. Remember to include often overlooked expenses like depreciation and maintenance costs. Smart categorization. Organize income and expenses into specific categories that align with tax requirements and financial reporting needs. Create clear categories for operational costs, marketing expenses, payroll, and other business-specific items. This organization helps with budgeting, tax preparation, and financial analysis. Documentation systems. Maintain proper documentation for all financial transactions using a consistent system. Implement a filing system for receipts, invoices, and bank statements, whether digital or physical. Regular documentation helps prevent errors and makes tax time much more manageable. Creating invoices. Generate professional invoices with complete client details, itemized services, and clear payment terms for smooth transactions. Tracking payments. Monitor outstanding invoices and payment status through organized tracking systems to maintain healthy cash flow. Reconciling accounts. Match payments with deposits through systematic reconciliation to maintain accurate financial records. Track due dates. Track due dates for payments and avoid late fees. Stay organized with a calendar or spreadsheet. Verify invoices. Verify invoices for accuracy and ensure they align with purchase orders. Pay attention to details and detect any discrepancies. Negotiate payment. Negotiate payment terms to secure discounts for early payments. Reduce your expenses and improve your cash flow. Compare transactions. Match transactions from your books to your bank statement. Identify discrepancies. Look for any transactions that don't match. Investigate and adjust. Correct any errors and update your records. Petty cash fund. A small amount of cash kept on hand for minor expenses. Cash transactions. Properly document and receipt every cash transaction. Reconciliation. Regularly reconcile petty cash with receipts. Proof of purchase. Receipts serve as proof of purchase for goods and services, providing essential documentation for business transactions. Expense tracking. Proper documentation aids in accurate expense tracking and categorization, enabling better financial management. Tax filing. Receipts and documentation are crucial for tax preparation and audits, ensuring compliance and accuracy. Calculate payroll deductions. Process accurate federal and state income tax withholdings, Social Security, and Medicare deductions. Include any additional withholdings like health insurance premiums or retirement contributions. Ensure compliance with current tax rates and thresholds. File tax returns. Submit quarterly payroll tax returns, Form 941, and annual tax forms, W-2s and Form 940. Meet all federal, state, and local filing deadlines. Report new hires and maintain compliance with employment tax regulations. Maintain payroll records. Keep detailed records of employee information, time sheets, pay stubs, and tax documents for at least 4 years. Store both physical and digital copies securely. Document all payroll calculations and maintain an audit trail of all transactions. Bookkeeping is crucial for small businesses. It provides valuable financial insights, helps track income and expenses, and simplifies tax preparation. By maintaining accurate records, small businesses can make informed decisions, manage cash flow, and ensure financial stability. Features. Consider features like invoicing, bank reconciliation, and reporting. Ease of use. Choose software that's intuitive and easy to navigate. Integrations. Look for software that integrates with other business tools. Support. Select software with reliable customer support and resources. Categorization. Group similar accounts together for easy tracking. Structure. Use a logical system for account numbering. Consistency. Maintain a consistent chart across periods. Date. Record transactions using a consistent date format: month, date and year to reflect when they actually occurred. This creates an accurate audit trail for your records. Account. Classify each transaction according to your chart of accounts, including both account number and name. Remember that each transaction typically affects multiple accounts. Debit. Appears on the left side and increases assets or expenses while decreasing liabilities or equity. Common examples include purchasing assets or paying expenses. Credit. Appears on the right side and increases liabilities or equity while decreasing assets. Common examples include receiving payments or recording revenue. Best practices include daily recording, regular reconciliation, and maintaining detailed descriptions. Remember that debits must always equal credits to maintain the accounting equation: assets equals liabilities plus equity. Balance sheet. A snapshot of a company's assets, liabilities, and equity at a specific point in time. Income statement. Summarizes a company's revenues and expenses over a specific period, showing its profitability. Cash flow statement. Tracks the movement of cash in and out of a company, illustrating its liquidity. Inflow and outflow. Cash flow management is the process of tracking and controlling the movement of money in and out of a business. Forecasting and planning. It involves forecasting future cash needs, developing strategies to optimize cash flow, and ensuring there is enough cash available to meet obligations. Financial stability. Effective cash flow management is crucial for the financial stability and success of any business. Financial planning. Predicting future income and expenses. Resource allocation. Determining how to best use available funds. Decision making. Supporting informed choices about spending. Accurate records. Keeping track of your inventory is essential for knowing what you have on hand, what you need to order, and what you've sold. This involves maintaining accurate records of all incoming and outgoing inventory items, including their quantities, dates, and costs. Efficient operations. Effective inventory management helps streamline your business operations. By knowing how much stock you have and how quickly it's selling, you can optimize your ordering and storage processes, minimizing waste and maximizing profits. Aging report. Organizes outstanding invoices by their due dates. Customer contact. Follow up with customers for overdue payments. Collection strategies. Implement procedures for managing late payments. Timely and accurate payments. Ensure employees receive their wages on time and accurately, minimizing errors and potential disputes. Tax withholding and deductions. Calculate and withhold appropriate taxes, including federal, state, and local, as well as employee contributions for retirement plans or insurance. Legal and regulatory requirements. Stay current on labor laws, wage and hour regulations, and tax codes to ensure compliance with all relevant rules and regulations. Federal taxes. Includes income tax, Social Security, and Medicare. State taxes. Vary by state and can include income tax, unemployment tax, and disability insurance. Local taxes. May include city or county income tax, property tax, or sales tax. Gather documents. Collect all essential financial records including receipts, bank statements, invoices, and previous tax returns. Create a checklist for W-2s, 1099s, mortgage statements, and charitable donation receipts. Set up a filing system to track missing documents and follow up with necessary institutions. Organize records. Systematically categorize all business transactions into appropriate tax categories. Separate deductible expenses from non-deductible ones, reconcile all accounts, and verify that income records match bank deposits. Create summaries of different income sources and maintain clear documentation of all business-related expenses. Consult professionals. Schedule meetings with qualified tax professionals early to review your financial situation. Discuss potential deductions, tax law changes, and strategies to minimize tax liability. Consider working with both an accountant for financial statements and a tax advisor for specialized tax planning, especially if you have complex business structures or investments. Accuracy and consistency. Maintain accurate records with consistent data entry for reliable reporting and analysis. Separation of duties. Different individuals should handle different tasks, like recording transactions and reconciling bank statements. Regular reconciliation. Reconcile bank statements frequently, ensuring financial records match bank balances. In-house bookkeeping. Hiring a dedicated bookkeeper provides control and direct communication. Outsourcing bookkeeping. Delegating to external experts saves time and resources. Cost-benefit analysis. Analyze your business needs and budget to choose the best approach. Bookkeepers provide valuable financial insights that help businesses make informed decisions. They track cash flow, identify trends, and highlight potential risks, which can be crucial for financial planning. Bookkeepers can help businesses make strategic decisions by providing data-driven insights on areas like profitability and spending. Stay up to date. The bookkeeping world is constantly evolving, so it's essential to stay informed about new regulations, software updates, and industry best practices. Enhance skills. Taking courses, attending workshops, or earning certifications can help you expand your knowledge and become more proficient in your role. Career growth. Investing in your professional development can open doors to new opportunities, increased earning potential, and a more fulfilling career. Continuing education. Pursue a bachelor's degree in accounting or a related field. Gain experience. Seek opportunities to work on more complex accounting tasks. Professional certifications. Obtain certifications like the Certified Public Accountant, CPA, or Certified Management Accountant, CMA. Confidentiality. Protect sensitive financial information from unauthorized access. Maintain the privacy of client data. Objectivity. Provide unbiased and accurate financial information. Avoid conflicts of interest or personal gain. Integrity. Act with honesty and transparency. Maintain ethical standards in all financial dealings. Industry specialization. Bookkeepers can choose to specialize in a specific industry or area, such as healthcare, real estate, or non-profit organizations. Management role. With experience, bookkeepers can take on managerial roles, overseeing teams and operations. Entrepreneurship. Some bookkeepers may start their own bookkeeping services or consulting firms. Professional accountancy. Bookkeepers can pursue further education to become certified accountants, offering more complex financial services. Embrace continuous learning. Bookkeeping is an ever-evolving field. Stay informed about industry trends and best practices. Accuracy is paramount. Maintain meticulous records and strive for precision in all financial transactions. Utilize technology. Leverage bookkeeping software and tools to streamline operations and enhance efficiency.